Today, we're going to talk about building your credit up and why you need to build your credit up. So, hopefully, if you're watching this, you're younger. The sooner you start your credit, the better, because a large impact of your credit history is the age of your credit. So, you don't want to have a history that's 1 year old when you're trying to go buy a house. Ideally, you want to start your credit history way before you need it. So that's usually when you're 18, 17, 18. For me, one of the biggest things that actually helped me was my student loans, because I got student loans when I was like 17. I still have them to this day. They're pretty much gone. But the point is, I have 4 items on my credit history that that are significantly aged, right? They're from 2007. And that has helped me. That wasn't on purpose. That wasn't to build my credit utilization, but that shows you the impact of your credit age. So my credit score has always been good just based off of that. But for things that you want to control this day and age, you might not want to go to school. You might not want to take out big loans. And I wouldn't say to take out large student loans to build your credit. Anyways, as soon as you can, as soon as you're able to, as soon as you're an adult legally, open up a credit card. You're not going to get much. You're not going to have much in terms of credit limits. But what you're doing is you're starting to build a line of credit, a history of payments and things like that, so that you can have a record, right? So what you do, when I started out, I had a credit card with a limit of like $300. Just used it to pay for gas, paid it off every month in full, and that was that. That was my credit card. Now, one of the key mistakes I made, because I think it cost me like $10 a month, which was an unnecessary fee in my eyes, is keep that account open. Keep that account running. If you can afford it, if it's not the end of the world, keep that account running and open, because it'll continue to have that age, right? Now my oldest credit card is from when I was like 21. It's like from 2011. I still have it open. I don't even use the card, barely once a year. It doesn't have a fee, has a decent credit limit. But the point is that it's open and it's established as older. See, you want these things to be on your credit history to be older. That is like number one thing. So then there's on-time payments, right? Always set up auto pay to pay the minimum. So even if you forget, for whatever reason, if you're unable to pay, that there's always a marker that this was paid. So every single month, it's going to show paid. Even after, from 18 to 32, being an adult, I have 100% on-time payments because of that. Always set up auto pay to cover your ass and just allow you to have that on-time payments. Like I already said, your age of credit is a big factor, but your credit utilization. So ideally, you shouldn't be using more than 30% of your actual credit line. So that means if you have a $10,000 credit line, your balance should never be over $3,000, right? And definitely should not be over $5,000. So even though I only had that $300 limit, really, you always have to cut whatever limit you have, cut it down to a third, because that's about what you're actually able to spend on your card or keep a balance on your card without it impacting you negatively. Your total accounts is good. The more the merrier, really, but it's going to be it's going to be bad. How do I put this? It's going to be weighted poorly if you have open account, because now you have 5 accounts that are under a month old, so your average age is going down significantly. So in a perfect world, what I would go back and tell my 18-year-old self is, hey, open a bunch of credit cards now, as many as you can, because then today I would have 5 10 plus year old accounts, keeping my age super old as instead of super young. Recently, I've been, using points, using credit cards to my advantage. So they just bought this house, et cetera, et cetera. So all my accounts are new, and my age has decreased. My average age has decreased significantly, thus making my credit score actually lower after I bought a bunch of stuff. But the point is, my credit score was high. And why does this matter? This affects the interest rate you're able to command when you're buying a car, when you're buying a house, when you're buying really anything, when you're financing anything. The cards you're able to qualify for and the interest rates on those are all reflective of your credit score. So if you don't want to pay more money to borrow money, you have to have a good credit score. So that's where that comes in. And then there's derogatory marks. Derogatory marks are things that go into collections. Now, don't be too worried about these. They are bad. You should have 0 derogatory marks, but shit happens. Stuff falls under, medical bills, whatever. Point is, you might end up with some derogatory marks at some point. You always want to address them. Try and address them, especially if your credit's good, especially if you don't have a long history of not paying stuff. Debt collection agencies are pretty forgiving in terms of what they'll allow you to do. You can pay it off and you're good to go. It's like it never happened. So that's what I would say. That's like the intro to credit course. If you're more curious about this, if you want me to go more in depth with other stuff, go down and write a comment. Let me know what you want to hear more about. I realize I haven't been talking about finance as much as I want to on this channel. I've talked about fitness. I've kind of talked about life, but actual practical financial advice I have not talked about. So I'm going to get more into that. And like I said, let me know if you want to know more. This helped me. This set a baseline for my whole financials through my 20s, 30s, pretty much your whole life. You're going to need, if you're going to live a traditional life, even if you're not, you want to have the option to be able to borrow money when you need it. And you want to be able to borrow it at a low rate, in my opinion. I'm not big on borrowing, on spending money that I don't have, but it's always nice to have it there as a buffer. That having been said, it shouldn't be your emergency fund. It should not be whatever. But I'll tell you what, it's really nice to have when you do need it. So establish your credit so you're set up in the future so you can buy a car, buy the house, buy the things that you need, and, exploit points, use point systems. If you are smart with your money, it will pay for itself. So do all of those things. Let me know how they work out for you, and let me know if there's any other financial subjects you want to talk about on this channel.